Okay, well, we should probably just start by talking about what shorting stocks is to begin with. When you sell a stock short, what's going on is you're borrowing the shares. You do not already own them. Now, there are a couple of reasons why people might sell stock that they don't already own. One is obviously to speculate that the price might fall and that they can buy it back at a profit at some lower price in the future. Another reason would obviously be to hedge. So sometimes you'll see people shorting stock against other positions that they own. So that's not an outright bearish bet, but they obviously have a good reason to do it. And finally, and one of the most significant reasons, is just for bona fide market-making activity. Obviously, market makers stand in the middle of the market. They create liquidity. When people are looking to sell shares, they are often selling them to market makers. And when they go to buy shares, they are buying them from market makers. And they maintain inventory. Sometimes they're long, sometimes they're short. Now, naked shorts refer to circumstances where people who are selling the stock short did not first validate that they could actually get a borrow on those shares. Now, there are some exemptions in the marketplace for people to do this. Market makers are among the groups that get exemptions. So we sometimes hear about people institutions having loopholes. It's not a hedge fund loophole. There's no loophole for them. There's no loophole for individual investors either. Bona fide market making activity, though, does have an exemption. The other thing I would quickly point out is that the whole issue here is whether, if you sell stock short, you are actually able to deliver the shares at settlement, which right now is 2 days after the current trade date. The thing is, there are stiff regulatory requirements around this. So we can actually track how much of this activity is going on by looking at something called the fail to deliver. So this is a report that is issued by the SEC, and it tells us each day the cumulative number of shares that those who are supposed to deliver failed to do so. Not every failure to deliver, by the way, is the result of a short sale. Now, I have heard people talk about the possibility that many times the existing float of shares is actually out there naked short, and that we can look at these failure to deliver reports and we can see that actually the magnitude is significantly smaller than that. We did see big fails to deliver early in the year in both AMC and GME. Sometimes reaching as much, in the case of AMC, as 40% of a day's trading volume. But since the beginning of the year, the average failure to deliver has actually been, on average, less than 2%. 70+% of the time, it's been well less than 1% of the average daily trading volume in either of these two stocks. So the important thing, I think, for people to remember is you hear these things, it sounds like there might be a loophole, there's a magic way to do it. There isn't. There's stiff regulatory penalties for not adhering to this. And I think really what people ought to be focusing on is that when you see elevated short interest, you see increasing borrowing costs, that combined with just ever rising prices, that creates the dynamic of a short squeeze. That's one of the reasons that we see this really highly volatile price action in conjunction, obviously, with all the momentum created by things like the Wall Street Bets Reddit crowd.
Right. Here's a big question, and that is with so much trading in terms of total volume every day off public exchanges, Carter, do you think we actually have a good sense of what is going on in these off-exchange platforms, wholesalers or in the dark pool?
Well, there's no way to answer the question because it is, just as you say, sort of off the grid, dark, all the things that they're referred to. But what we do know is that hyperactivity is not new. Again, it happens in pink sheet stocks all the time for generations, and essentially things like AMC. I mean, AMC was down at $1.97, right? I mean, GME was down at $2, and so while most pink sheets, and these are not pink sheets companies officially, most low price stocks don't end up going up 100 and 200, 1,000%, if you will. But the circumstance of this is not new. I think that's very important. It happens to be a new era with internet and Reddits and tweets, but this has been going on since time immemorial.
Right. Tony, your take?
Yeah, so I don't think the debate here is whether or not naked shorts exist. I think what Mike is trying to show you is the fact that the magnitude of which, if it does happen, that we're seeing it. Now, I will say this is not particularly my area of expertise, but the one thing I really want to help investors better understand is that when you're thinking about shorting a stock, The reason that we're here to talk about options here is to protect your downside. And when you're shorting a stock, whether you're doing it selling short or even if you're doing it naked, you have unlimited risk to the upside. So that's why we advocate for using strategies like a put spread if you're very bearish on a particular stock, like I am on Okta, or if you're more mildly bearish on a particular stock, protect yourself by selling, let's say, a call credit spread. That's going to protect you if you are caught in a short squeeze from that unlimited loss to the upside in a stock that you're bearish on.
Carter, let's go back to AMC specifically. We saw a big run in today's session. Volatile week, no surprise. What do you see in the charts for AMC?
Sure, and we might have one here before you. So it's all sort of very sequential, if you will. Before looking at the chart, one judgment does have to be made. The high of June 2nd, $72.62, will that be exceeded? I would say no. Right? So now it's a question of, can we trade it this day, that day, make or lose? And the hunch is that, yes, if you get it down into the 40s, low 30s, I think you take a shot at it. If it's back towards sort of the 68, 70, I think you fade it and you play it, and that's the only way you can play it. But I think it's important to make that statement that GameStop's high at 483, that's permanent. We're nowhere near that, right? We're half that. And I would say the 72.62 high for AMC is also going to end up being the high.